This show is brought to you by Beco Dairy Automation. You have tuned in to the Agribusiness Dairyman News Hour magazine, your 1 hour all-dairy connection. We call it the Dairyman's source for new ideas, information, and technology, mixed with a double dose of current market conditions. The what, the why, and the how things influence the amount of money dairy producers receive for their daily milk deliveries. We offer this daily News Hour magazine as a catalyst to make long-term dairy producers sustainable. We invite every dairy producer in America to get their daily dose of what can be done and what they can do to achieve and maintain profitability on their farms. $22 for 36 months is our goal. We advocate there is a way forward. We invite dairy producers to come listen, to learn, and to participate. This is a no complaint zone. We talk solutions. So get out your pen and paper. Here is your host of the Agribusiness Dairyman News Hour magazine, Tom Van Nortwick, owner of Agribusiness Publications, publisher and editor of the Agribusiness Dairyman magazine.
Good morning, everyone. Good morning. Friday the 11th. The 11th of March, 2016, and welcome to the Agribusiness Dairyman News Hour magazine. My name is Tom Van Nortwick. We express appreciation to those who help us and provide support for this opportunity to better communicate news and information to dairy producers. A departure for us, as we've talked about before. Not something that we have done in the past, but we did gain a great deal of opportunity to talk with dairy producers via conference call for a very long time while we were helped to organize the National Dairy Producers Organization. And so those were good times, and I'm looking at some of the stuff here that we need to make sure, but it sounds like we're doing all right. We're recording here this morning. That's moving along. We're going to be joining Ron O'Brien, a senior global strategist with Interfoods, who provides for us his daily conference call to his clients and others who are on board listening to the daily trades that take place at the Chicago Mercantile Exchange. In the way of news this morning, a lot of information always available, and that's the best part of the day and age that we live in. There's just information abounds from all over the world. And today we got information from China, from New Zealand, from Australia, Mexico, Japan, just to name a few. But in the news this morning, let's just pull this up because it's about Western butter makers, and always important to all of us what's going on in butter, because butter is really helping hold prices out of the cellar right now for dairy producers. Western butter makers say that aside from regular contracts, butter demand has eased somewhat. The spring holiday butter orders are getting filled and inventories are building. Production is generally steady and active. However, a few processors are backing off butter production and shifting cream to other manufactured product lines like cream, cheese, and ice cream. Most view this as normal seasonal tendencies. A few manufacturers say additional inquiries for butter are light and buyers are taking a wait-and-see attitude. End users seem to be holding off and working through their stocks while waiting for clear market signals of whether butter prices will slip as spring flush begins, or if strong domestic consumer demand will continue into summer. An underlying question some processors are considering is whether supply and demand are in balance. A few others are wondering if the secondary markets have filled warehouses and gained coverage of late-year butter needs. The National Retail Report, Dairy, for the week of March 4 through 10, found that the U.S. weighted average advertised price of 1 pound of butter is $2.90, down 6 cents from last week. And they've got more numbers here, and it goes on and on and on with statistical data. No shortage of statistics. Oh, my gosh, that's one thing for sure that we learn. When you get involved in the dairy business, there's a ton of statistical data, and it's good. And if you look at our publication, the February-March issue at my-dairyman.com, you're going to get a tremendous look that Jim, our graphics people, did to convey those numbers and the graphics that were used to help you see. One of the big things that we'll focus in our next publication is going to be these inventory numbers, but because that's going to be that's the stairwell we talked about yesterday extensively. That's the stairwell that you'll have to climb back up in order to get price restoration. And within that stairwell, they've stacked all of this excess butter, powder, cheese. But here out of the Midwest, cheese manufacturers are voicing concern about increasing cheese inventories, yet acknowledge that CME group cheese pricing has remained in the recent range. Most cheese plants have contracted milk arriving every day, so cheese continues to be made. Sales are stable, and sales volume is still pretty good. The challenge in the overall mix is the strong volumes of milk produced during a relatively mild winter and into early spring. We are very early here in California. I say very. For me, it seems very early. It's been warm now for quite some time. I'm talking about in the 70s and low 80s every day, on and on. We've had some rain. Last weekend, California saw, in our neck of the woods, my rain gauge measured 3 inches in 3 days, from Friday, Saturday, Sunday, on into Monday morning. Last week, 3 inches. Now, that's just a ton of rain for us. So the old song that we've all known, it never rains in California. Well, it doesn't rain enough all the time, but it has for us of late. And of course, the best part about what we do is we have an arrangement in that we keep our snow up on the mountains in the high Sierras above us. We don't usually have any snow on our driveways like our friends in the Midwest and East do. We don't shovel that snow, thank goodness. That's a whole different experience. But anyway, back with the Midwest cheese report. However, there will be a point that cheese storage is essentially full unless one of three eventualities or some combination of the three occurs. Milk flows decline, so less cheese is made, domestic consumption increases further, or export sales increase. We should take a raffle as to which will take place, as they indicate probably some sort of a combination. The DME National Retail Report daily shows that March 4 through 10, Midwest ads for 8-ounce shredded cheese have a weighted average advertised price of $2.03, 25 cents lower than the national average price. Midwest prices range from $1.67 to $2.50. 1 year ago, the national price was $2.67. Big change, big change. Consumers have got to be thrilled, though. I mean, that's a consumer benefit when cheese prices are down, and don't think that it isn't noticed by consumers. Now, here's the best news of all. And of course, here we are at 8:42. I think what we'll do is we'll save this particular piece of information. We need to get on the board with Mr. O'Brien as best we can, and that's always
I think that first be hard.
See, and there's
down the street.
There's those darn pop-ups that keep plaguing my life. Okay, so we go to here. We go to.
Just end the thought.
I know. My producer, Mr. Stewart, says, would you shut up? Could you shut up while you're doing this? Okay, here we go. We're going to be quiet and see if we can get Mr. O'Brien on the phone. This is the Agribusiness Dairyman News Hour magazine. It's Friday, March 11th, 2016. Thank you for joining us. We'll be joining Mr. Ron O'Brien, the Senior Global Strategist with Interfoods, as he walks us through the Chicago Mercantile Exchange dairy buying and selling, starting with blocks and barrel cheese.
Yeah, it's around the cheese off. Open the open. Yeah, we're open, yeah. Nothing to start. No bids, no offers. $20 seconds in. Still nothing posted. No bids, no offers. Doing all right, man. We're 30 seconds in here. Nothing posted. No markets. Selling the block. 7. And yeah, nobody's showing anything out of the gate. Yeah, I think so. Yeah, I mean, we're getting a little bit of a bounce across the board here. So, a minute in, nothing posted. All right. 152 even offer in the block by KPC. One time 152 even offer block. Nothing in the barrel right now. A penny higher offer in the block by KPC. No bids. $150-175 offer in the block by KPC. Got up to the call here. 151 even offer in the block by KPC. Steady offer block. No bid. First call. Second call. Third. 150-75 offer in the block by KPC. We're down a quarter on the day block. Nothing barrel. First call. Second call. Third. 150.5 offer in the block by KPC. Posted. First call. Second call. Third. 150.25 offer in the block by KPC. Posting. First call. Second call. Third. 150 even offer in the block by KPC. We're on a penny on the day. The block, still nothing posted barrel. First call. Second call. Third. Close. All right, so we're going to settle right there at the block at 150 even, down a penny. No low trading. Barrel settling 147 even, unchanged. No low trading in the barrel. Yeah, there we go. All right, no problem. Have a great weekend. Thanks. Bye-bye. All right, peeps. That's it. Settling block 150 even, down a penny with no low trading. Barrels 147 even, unchanged. No low trading. So I'm going to be back on here for not bad. A couple few not bad. Settled at 75 even. Stay with me.
Hello, I'm Eva Strang, Education Coordinator for the Allied Milk Producers. Cereal and milk have always been a mainstay for breakfast, at least since 1882. That's when the first commercially manufactured cereal was made by Henry Perky. It was called shredded wheat, and it's still with us today as one of the most popular cereals. Remember, breakfast is probably the most important meal of the day, and a good breakfast includes nutritious dairy foods like milk on cereal, a good way to start the day.
Is your milking equipment holding your dairy back? Are you still milking with 5/8-inch dairy equipment that became popular 35 years ago? Your dairy's production and milking goals have changed. Shouldn't your dairy equipment be able to meet the same goals? Beco Dairy Automation can help with industry-leading, innovative dairy equipment that eliminates all restrictions in the milk path of your milking parlor. Eliminating the restrictions in the milk path improves production, milking flow rates, parlor throughput, and ultimately better udder health for your cows. Beco Dairy Automation is your partner for success, delivering unrestricted, durable, and profitable milking equipment to today's commercial dairy. To learn more, call us today at 1-800-344-7166 or check out our website at www.beconos.com.
All right. Thank you. You're listening to the Agribusiness Dairyman News Hour magazine, your 1 hour all dairy connection. We've just listened to the Blocks and Barrels trades at the Chicago Mercantile Exchange here on this Friday, March 11th, but it's pretty darn quiet. All things considered, no loads trading and prices pretty much staying constant. Back to the news this morning, an article that is interesting relative to how things have evolved in the dairy industry. It's always fun to see that. Jonathan Knutson of Agweek staff writer writes his title, Mootitude, is that right, of changes, and dairy industry evolves. And they bring up, let's see if I can grab these key... Get out of there. Milk production continues to shift to larger farms. In 1987, after decades of consolidation, half of all dairy cows were on farms with 80 or fewer cows. By 2012, so that ends up being 92 would have been 20 years. So add 5 to that. So 25 years later, by 2012, that midpoint herd size had grown to 900 cows, more than 10 times the size of dairies just 25 years earlier. Costs are a driving force behind structural change, and you have to understand in California that size is about right. Just over 900 cows is the average dairy. We'd say 1,000. We kind of always round up to 1,000 in California. New Mexico, the last check I had, it was about 2,300 cows. So there are big dairies all over, of course, and even in Wisconsin, the trend is larger. Costs are a driving force behind structural change. The largest farms earn substantially higher net returns per hundredweight of milk produced, and they have strong incentives to expand. Average milk costs of production fall sharply as herd sizes increase, and the largest farms, those with 2,000 or more head, realize costs per hundredweight of production that are 16% below farms with 1,000 to 1,999 herd, and 24% below farms with 500 to 999 cows. So 24% is a big deal. Even the let's see, average costs fall sharply as herd size with those 2,000 or more realize cost per hundredweight of production that are 16 to 24%. So no small deal. Changes in the size structure of dairy farms reduced national average milk production costs by nearly 19% between 1998 and 2012. In turn, lower milk production costs reduced milk prices compared with what they would have been without structural change. There's no doubt about that. Well, I'm going to say, yeah, maybe no doubt about that. Because guess what? Well, look where our prices are today. You know, there's a lot of variables here, and on the positive side, they are able to make milk at a lower cost. There are savings involved. And so now we know what herd size. Okay, we got that down. But it doesn't necessarily mean that they're always profitable. And that's one of the things that we will continue to drive home. And the cover story for today is really all about that attitude of dairy producers. Larger is better, but it has not yet solved the pay price of milk inequities that exist so often, and far more often in a percentage of time than this period of time that they're profitable. We have good peaks, but we have longer, lower valleys than ever before relative to pay price. And so I think what is amazing is how well the adaptive dairy producers have become. I mean, the ones that have been able to adapt and get the financing necessary to grow the herds, or they've done it over time during the peaks, the high peaks. And but many of them have been able to utilize the financing mechanisms provided by their banker to build on what they know. And what they know is how to make the best milk in the world. What they have accomplished over time, what they have accomplished over time is the fact that they know how to do it for less. And 24% less cost, that's a big deal. 16 is a big deal when you're dealing in the numbers. Okay? And so it's an amazing transformation. We're going to be joining Ron O'Brien for the dry powder trades here at the Chicago Mercantile Exchange in just a moment. So stay tuned until that closes, and then we'll come back, continue with some news, and tie that into how our cover story represents...
Hey, it's Ron. How are you? Doing all right, man. Happy Friday to you. It's been a crazy week, so... No. Yeah. I know. Yeah, it's that kind of day. Yeah, it's just, hey, bid everything up today. It's Friday. Why not? Friday by day. I know. Well, coming up on the open here, we got, 75 even with settle, and we're open. 74.5 bid on one by Trev here. 75 even bid on one by Evie. 77 even offer by PPT. 75 and a quarter bid on two loads by PPT. So he's a bid and the offer right now. BLT joins the offer. 75 and a half bid on one by Saw. 575 bid on two by PPT. Saw joins the offer at 77 even. Three offer at 77. Yeah. 75 bid by PPT two times. Yeah. Three offered at 77 even. 5 seconds till the call. All right, going up to the call here. First call. Second call. Third. 76 even bid on a total of 3 loads, 2 PPT, 1 saw. Still offered at 77 3 times. Posting. First call. Second call. Third. 76 and a quarter bid on 2 by PPT. So 3 offered at 77 even, 1 PPT, 1 BLT, 1 saw. Saw buys the 77 from PPT. Saw cancels at 77 even offer. Still one offer at 77. 70. He's a 77 even offer. Still one offer at 77 even. 76 and a quarter bid on 2 by PPT. No, he's not. Just BLT on the offer. First call. Yeah. Third. 76 and a half bid on 2 by PPT. Oh, he can't do that. We're closed. You can't do that. Last trade was 77. He tried to up his bid, but he needed to buy the one at 77 even to keep it open from BLT. So that's where we settle. 77 even, up 2, just the one load trading.
All right, there we go.
No, it was a 76 and a quarter bid on 2. PPT tried to bid 76 and a half on 2 in the call. But since the last trade was 77 even, that was the last trade, that did not improve the market, so they could not, so his 76 and a half bid was ineligible. Yeah, the offer was 77 even going out by BLT. So in order to keep the market open, PPT would have had to buy the 77 even from BLT. But he did not do that. So we just traded one load at 77. Yeah. He was on 2 phones. Kind of hard to tell. I'm not sure. That's right, sir. All right, man. Have a great weekend. Thanks, man. Bye.
All right, there we learned a little bit. I let that run.
With 1 low trading. I'll be back on for butter and a couple few butters still at 98 quarters.
Move over, Manny, Mo, and Jack. For quick, convenient auto service and no appointment needed, ask for G Express service from Gorpetti Automotive in Visalia. We'll guarantee an oil and filter change in as little as 39 minutes. And there's more. Need your tires rotated? A brake job? Even a 15,000-mile service? There's no appointment necessary, and we'll guarantee your service time. G Express. It's a new level of convenience you'll only find at Gorpetti Automotive.
Is your milking equipment holding your dairy back? Are you still milking with 5/8-inch dairy equipment that became popular 35 years ago? Your dairy's production and milking goals have changed. Shouldn't your dairy equipment be able to meet the same goals? Beco Dairy Automation can help with industry-leading, innovative dairy equipment that eliminates all restrictions in the milk path of your milking parlor. Eliminating the restrictions in the milk path improves production, milking flow rates, parlor throughput, and ultimately better udder health for your cows. Beco Dairy Automation is your partner for success, delivering unrestricted, durable, and profitable milking equipment to today's commercial dairy. To learn more, call us today at 1-800-344-7166 or check out our website at www.becoKnows.com.
Ron's team helping out there. Back to the news. U.S. cow yields predicted to increase by 12,000 liters by 2025. This is written out of Oceania markets. But they're reporting on what the USDA is saying or predicting that American milk producers will do going forward. The article reads, a surge in milk production in the United States is being forecast for the next 10 years by its Department of Agriculture. The USDA long-term agricultural projections forecast milk production by 2025 to increase to 112 billion liters, up almost 23% on 2015 levels. The majority of this increase is expected to come from productivity improvements, with milk production per cow increasing 12,000 liters, an increase of 2,200 liters per cow compared to 2015. The USDA says this reflects continued technological and genetic developments as well as efficiency gains resulting from consolidation in the sector. U.S. dairy cows numbers are projected to decrease in 2016, remain about even at 9.3 million head through 2020, and then rise through the remainder of the projection period. Rising milk prices after 2018 and lower feed costs than in recent years give favorable returns to producers and provide economic incentives for this continued expansion. That'll be great if that all comes true. Unfortunately, if volatility remains, then due to lack of market responsive milk production relative to profitable demand, then we're not going to see those types of, although technologically speaking, there may be advancements in how dairy producers can make more milk. The problem will always be whether they've got the money or the ability to invest in that if they're not making a profit. And our cover story compares today the difference between what everyone projects the U.S. producer to do and what he can financially afford to do based on the pay price of milk. I ran into a producer this week who's going to put in a methane digester. And he says, oh, we're going to put one in. And I said, well, then you must have received a grant to do that, because you certainly can't pay for it out of $13 milk. And he said, you're right. Okay, and so, but the reality is that the government's not always going to be there, nor can the taxpayers afford to pay for continuing technological advancements on dairies or in farming or in car manufacturing, for that matter. Okay, number one, in our country we've got a $19 trillion debt, and they're going to have to cut. Cuts are coming. We have got to reduce the size of government. And one of the things that's been on my mind of late is the extreme importance of dairy producers getting financially structured and stable to the point that they are not on the edge, on the razor's edge relative to survival. Nobody can long endure these below cost of production numbers, and yeah, for a time they may be ready after 2014, but we're going into our 15th month, and we're going to go 24 to 36 months before we see dramatic changes in demand that might provide for dairy producers a price above $16, especially here in California. And so the push for more production, is it possible? Absolutely. There's just no doubt about it. It's possible. The problem we run into, though, is the amount of money, the acceleration of the production models in other countries that are currently being relied upon by these projections as being stable and being large in volume and regular. Stable and regular, same thing maybe, but China came in and bought everything at half price last month. What are they doing this month? I have a feeling they're not going to be there. It'll be interesting to see what happens when we get further into the month and take a look at what global demand is doing in the month of March. But the reality is that the buyers and sellers are competing for too few dollars, and dairy producers are caught in the middle. There's only so much money, and there's only so much milk. Well, in certain countries, they're going after a higher volume of milk production, which is going to cause a decrease in global demand. And I had some interesting, very well-informed people yesterday. There's no, because I asked the question, how do we unhinge? How do we separate what dairy producers are being paid for their global or their domestic milk production and consumption? We'll come back with that message and more information about that as we'll now move to the butter trades coming up with Ron O'Brien of Interfoods. Stay tuned for the butter trades. We'll come back at the end of that buying and selling process.
All right, coming up on the open here. 198 a quarter with settlement. We're open. 198 even bid on one by GTL. 198 even bid on one by GTL. No offers. 98 a quarter bid on one by Evie. Steady bid by Evie. 202 even offer by Trev. Got a steady bid by Evie, offered at 202. Offer. 1 at 201. Three offers, 1 at 201. So 98 a quarter bid by Evie. One offered at 201. All right, minute in here. 198 and a quarter bid on, one by Abby. Offered at 201 by Maria. DLT joins the offer at 201. Two loads offered at 201. Still steady bid on one by Abby. Trev joins the offer at 201. Three offered at 201. All right, 10 seconds to the call here. Steady bid on one by Abby. Three loads offered at 201. One Maria, one BLT, one Trev. Going for the call here. Posting. First call. Second call. 98 and a half bid on one by Abby. Still three offered at 201. Posting. First call. 98.75 bid on one by Abby. Posting. First call. Second call. 99 even bid on one Abby. Still three offered at 201. Posting. First call. Second call. Third. Trev sells that 1 and 99 even to Abby. 99 even trade here. We're up 75 today. 99 even offer by Trev. Posting. First call. Second call. Third. Minor buys it at 99 even from Trev. 199 trade. 201 offer by Maria. 98.75 bid on one by Abby. $2 even offer by Abby. 98.75 bid on one by Abby as well. So it's on both sides of the market here. DLT joins the offer at $2 even. Posting. First call. Second call. Trev sells in at 98.75. Abby 98.75 trade. Still two offered at $2 even. 8.75 offer by Trev. 98.5 bid on one by Abby. 98.75 offer by Trev. Posting. First call. Second call. Third. Dinner buys it at 98.75 from Trev. Line is 4 all day here. So 98.5 bid on one by Abby, no offer. 99.5 offer by Maria. 98.5 bid. DLT joins the offer at 99.5. Two offered at 99.5. First call. Second call. Third. Close. Going to settle right there at 198.75, up a half. 4 loads trading total in butter. All right, everybody. Have a lovely day. Toss you up. Have a lovely, safe, prosperous weekend. Take care.
As dairy farmers watch profits slip away and a wonderful way of life painfully comes to an end for future generations, Dairy Pricing Association sees a brighter future simply by having a solution. These dairy pricing farmer members in 10 states and growing have figured out a way. Government handouts are not the answer. It's time for farmers to take matters in their own hands. Dairy Pricing Association is asking for farmers to contribute 10 cents per hundredweight to buy surplus dairy products to create a floor price, as well as helping relieve hunger in America. This is a win-win. As dairy farmers, we watch markets fluctuate as much as $4 per hundredweight in 1 month's time. 10 cents is nothing. Imagine being able to curb another 2009 scenario simply by controlling the floor price that you need as a dairy farmer to stay in business. With the dairy products that you as a dairy pricing member purchase, thousands of people are fed. No government assistance is needed. Rather, simply you as a dairy farmer are helping yourself by helping others. For more information, visit online dairypricing.org.
Are you restricting the profitability of your dairy herd? Beco Dairy Automation can help with industry-leading, innovative dairy equipment that eliminates all restrictions in the milk path of your milking parlor. Beco Dairy Automation is your partner for success, delivering unrestricted, durable, and profitable milking equipment to today's commercial dairy. To learn more, call us today at 1-800-344-7166. Check our website at becoKnows.com.
Burritos, colorless casseroles, the mind boggles. Cheese transforms the eating experience. It can be creamy or crumbly, sharp or sweet, hot and gooey, or room temperature. With hundreds and hundreds of different varieties, cheese can really add zing to your meals. Behold the power of cheese, presented by the Allied Milk Producers.
To learn or hear more, please join us for our daily News Hour magazine, your 1 hour all dairy connection. It is broadcast live every morning at 8:30 a.m. Pacific and 11:30 a.m. Eastern. You can join the broadcast by calling 712-432-0900. Your conference PIN number is 666632#. Or you can listen to the recorded call by dialing 712-432-0990, using your same PIN number for personal access. Find us on Facebook, Twitter, and on YouTube. We truly believe you need to and can know more. Our job is to deliver more knowledge to dairy producers, believing that if knowledge is power, then applied knowledge is nuclear power. We'll see you on the call.